Thomas and I, we're really only friends because he's got the coolest name that I know of, right? I think it was his high school nickname, and then he just probably changed his name sometime thereafter, just to continue to be cool after high school. So as Thomas said, name's Joe Zehnder, attorney in town. I've been practicing about 20 years. Did a bunch of litigation early on because I had to. I've been at the same firm for 20 years, so I've grown up through the firm. And now primarily handle transactional matters, real estate, business deals of every sort, and estate planning for clients. So hopefully you guys will ask questions. I don't know if anybody's thinking about a business. This is basically your hour. My regular hourly rate is $3.25 an hour, so you can ask questions. You're going to get free legal advice, okay? Free legal advice. But you can only sue me for what you're paying today to me. So that's my only caveat. So primarily we're going to talk about basically entity choice and when to set up an entity. Do you need an entity? What's the liability issues, tax issues, other issues that you might have in mind that you want to talk about. So anybody have a business that they've started now or they're thinking about starting? Go ahead, what do you?
It's an app. I'm working on developing an app for basically athletic community.
Okay.
So
Will you be the only owner?
So far.
Only owner?
So far.
No employees?
I have employees probably. Well,
You'll probably have employees, so they'll be independent contractors?
When I find the right people, then I won't be the owner.
So he doesn't have an employee.
Okay. It's a key issue. What are you doing?
I'm trying to open a coffee shop.
Coffee shop. Okay. So would you be the only owner?
Yes.
Only owner, but you obviously have a bunch of employees, right? Okay. Anybody else? What are you doing?
I want a cannabis shop.
Cannabis shop. Sweet. So you definitely have employees. You'd be the only owner?
My husband's, I don't know if that counts.
Not really. No. If he wants to sue you or you're suing him or whatever, then you got there's other people down the hall, family law attorneys I'd send you to at my firm. So then you have other issues. But anybody else?
Veteran housing, real estate.
Veteran housing. So what would you be doing in the business? What would the business be doing for veteran housing?
Providing housing for student veterans that are in school.
So would you own the dirt?
Yes.
You'd own the dirt, and you'd be the only. Would there be employees?
There will be employees and then maybe a partnership with someone else.
Somebody else. Okay. So I'm gonna write some of these down so we can go through it. How'd you describe it? Veteran. To the good.
Or student veteran housing.
Student veteran housing. Let's do student vet housing. Okay. We got any pens at work around here? Did you guys not pay your?
Yeah.
We got a coffee shop. This one's a little better, I think. Coffee shop. We'll say weed shop. All right. Presently legal. Not in the eyes of the IRS, but okay. App development. App. Oops. Terrible. Development. Was there anything
I'll
else?
throw mine in. I'm currently working as an agent of New York Life.
Okay. So, are you treated as an independent contractor?
Not yet. I will be shifting to to a contractor, 1099.
Financial advisor. So, are you an employee of them right now?
I'm in a W-2, yes.
Yeah, you are. Yeah, but probably, I'll say IC, independent contractor. Okay.
And looking at doing business as.
So, so here.
Throw that away.
Just
toss it.
all right. So, this is a better pen. Green money, right? Yeah, sweet. So you just issues that will drive you one direction or another, right? So, the student veteran housing. I mean, you're probably gonna have partner or investors. I mean, we're gonna be more than one of you essentially. Gonna have some employees.
Yes.
Too, right? So I'll have some employees here. Those are drivers. Coffee shop's gonna be one owner, right? One owner. My handwriting's terrible. It's the only D I got in my life, man. It's like second grade, penmanship, bane of my existence. I'm serious. I remember it was, my parents were like, you need to try to write, but I'm like, I can't. Right? My son has the same affliction. I told him, don't worry about it. You know, I'm a productive citizen, don't worry about it. So one owner is going to have a bunch of employees. Weed shop, husband and wife, right, you said?
Yes.
Husband and wife, owners. Gonna have employees. Okay. App development, you know, maybe another partner. I think on the, I don't know what you do in the business. Are you a super tech dude?
I'm learning tech.
Pretty techie guy? Okay. So, I mean, you know, nowadays, you can go online and get, I mean, there's all these shops in India. I mean, they outsource stuff. I mean, I was talking to a business owner the other day in the immigration law field, actually, and he outsources to some of their filling out the paperwork for immigration documents that they prepare as attorneys. Right, then they review it, so it gets legal review, but they're paying whoever in India, Bangalore, I think is where the business is at. I mean, anyway, that's crazy. So maybe some partners here. I mean, you'd probably do independent contractors. That's what I'm thinking on the app development side. Financial advisors. So, I mean, right now, you know, W-2, maybe you can become in a contract. I don't know if you'd go set up your own office, you know, right? Probably some sort of, have some partners, have some support staffs, you know, with employees. So this is a really good mix of stuff. So, you know, the first issue, one of the, why I focus on, you know, who owns it, you got any employees, right? Employees are great. Hopefully they make you money. If they don't make you money, you shouldn't have them, right? Unless you just want to give money away. But employees are like children you can't spank, okay? They're just liability creators for you, potentially. If they're not making any money. Hopefully they're making you money, but they're liability creators. So if they wrong somebody in some way, right, it could be a tort. They're driving your car, you know, it's got your business name on it. They run some kid over on the sidewalk. I mean, they get individually sued for that, but it's also a tort that goes back to the business and the business gets sued. So, right? So what's the main defense for that? Insurance, right? Be adequately insured. Whatever business you set up, be adequately insured. How isn't the weed business, will people insure you?
People insure me?
Yeah, I mean, will the insurance companies? That's one issue. I guess I've never seen any.
Yeah, I don't know.
There's a special insurance company that specializes.
That will do it, really? Yeah, I mean, because, you know, it's just, right now, the income, it's seen as, remember the tax code is 280E or whatever, you know, you take no deductions on your income. I mean, it's a special universe, so issue I never thought about. But, so regardless of whether you incorporate or not, form some entity, you know, you want to have adequate insurance for liability purposes. So if you take nothing else away today, the trigger of when you form an entity, has anybody formed any? Do you have a business what do you?
And I'm in an LLC. Actually, I was a sole proprietor, but I got into a consulting situation, where they wanted me to be an LLC, which probably was in protection for their company also.
They want to treat you as an independent contractor?
They didn't want, no, well, I would have been, a 1099, but they wanted me as an LLC, not as a sole proprietor.
But they want to show that you have an independent business from them. Right. That's why they make you do that.
Right.
Okay. So if you take nothing else away, when you for sure want to have an entity that has, you know, a liability shield to it, okay, between you, the owner, and whatever the business is doing, okay, and here's you, the owner. I guess we'll just make a little stick figure person, right, as opposed to business. So if your employee does something, like I said, your employee, then that person who gets wrong can sue the business. They could sue the wrongdoer out here, the little employee who ran them over. They can sue the employee. They can sue the business, but they can't go through the business and go after your house, right? Up here. Okay, so it gives you protection against that. Same thing, let's say you have another owner in the business. And you have another owner in the business, you want to have an entity of some sort. Business owners can be liability creators for you. Employees can be liability creators for you. So your partner, fellow shareholder, whatever, commits a wrong against somebody, they can sue, right? They can sue this person, and they can sue the business, but they can't sue the business, come through the business, and then sue you and take your house for the big judgment that they get, right? Still, number one way to protect yourself from liability is get adequate insurance. All right, that's number one. So if you get to the hurdle where you got an employee, you have anybody else as an owner of your business other than your husband, okay? In that case, you want to make sure that you have adequate insurance. Then you want to form some sort of entity. If you don't have an employee, you don't have any fellow business owners, then you can be a sole proprietor. Again, have adequate insurance. Because as soon as you form an entity, you're going to have greater complexity from a tax perspective, cost perspective. You're going to have filings that are due. You might have, if you're an S corporation, you've probably heard of, C corporation, whatever, you're probably going to have another tax filing that then reports to your 1040, right, individual tax return. So to have that extra expense, there should be a reason for it. Now you might be seen as sole proprietor as not as serious as some other business owners, so maybe you want to form an entity for that purpose. But in reality, if you're the only person who's doing something for your business, okay, it essentially provides you almost no protection at all, okay? Because if you wrong somebody, right, you're acting for the business, you're acting for yourself, someone has to have committed the wrong, run the person over on the sidewalk, whatever, you're going to get sued individually anyway, okay? So I don't want you to think, oh, I form an entity,
Hey, Joe. Got a quick question on that one.
Yeah.
So my other business that you helped me form, but there's another craziness that goes with the properties that I own, especially the one up on the hill, because it is under a Schedule C or E. And
Right.
but it's a sole ownership because I took it that way because I was able to get a consumer loan rate as opposed to a commercial loan rate.
Okay.
However, the accountant basically says you don't need to form an LLC, just get a big umbrella to protect your assets.
Yeah.
So
That's fine, because you're the only owner, right? So,
Yeah.
classic example. So you own a piece of rental house, and you're like, oh, I'll put it in an LLC. Is that going to protect me? You're the only owner, right? Well, if the tenant is going up the stairs, and they fall through the stairs, and they fracture their leg or whatever, well, who had maintenance responsibility for the house? The owner, right? I mean, the only person who takes care of the place is you. Individually, you're going to get sued anyway. So then you call me up like, yeah, I formed this entity, and now I'm getting sued individually. Yeah, because you're the only actor, right? You're the only actor. But if you had that property and it was being maintained by a maintenance company, or you had employees, whatever, right? And that, hey, it was perhaps somebody else's responsibility, or else they might try to get to you and say, oh, it's negligent supervision of the person who could have taken care of, Hey, anyone can sue anyone for any reason in America at any time. Doesn't mean you're going to be successful, but it means you're going to have to defend yourself. It's going to cost money, and hopefully you got other people's money to throw at it, which is insurance. Right? That's why you get adequate insurance. Okay? So, that's a great example. The one thing, inverse, rather than people coming through with judgment, trying to take that property, go after you personally, what does help you a little bit with, right, is asset protection. People coming the other way, they got a judgment against you personally, but your assets are tied up in this LLC, right? Mm-hmm. Now they got to do something to try to shake that asset loose, turn it into cash, get it distributed to you, and then they can take it, right? That's difficult. Makes you kind of like a porcupine. If you're really hungry, you might eat a porcupine in the forest, but otherwise you're not really hungry, you're probably going to pass on it. Makes you more like a porcupine from a liability asset protection standpoint. But that's a good question. Where it does protect you, if you're the only owner, you're the only actor for the business, you form an entity, or it does protect you would be contract liability, right? You execute a contract on behalf of the entity, it would be that potential liability would extend only as between the company and whoever you contracted with, not you personally, right? But that's a rare case. even if like you said, say you had an apartment building or something, right? And you owned it individually, you formed an entity, whatever, and then you're going to go get a loan, right? What is going to happen with a loan? They're going to be personally guaranteed a loan anyway, right? So that liability extends to you individually. If you're going to go, say if you're a coffee shop, you're going to be, and even you got partners, you got employees, whatever. You know, what's the commercial landlord going to ask you to do? Personally guarantee whatever the lease is, right? 5-year lease, whatever. So again, you don't pay them, they're going to sue you individually anyway. So it's not, you know, people are, your creditors are smart enough, get around it, going to give you a personal guarantee, banks and landlords in particular. Okay, I mean that really covers, I think, what I wanted to talk about as to liability. Anybody have other questions from a liability perspective?
So, say I did have investors, how does that work if there is a liability issue?
If they're other owners or they're just investors? And how would they invest? They would invest. They hold equity. They'd be equity owners.
Well, S corp and they have shares.
Yes.
S corp, they hold shares, or it's an LLC. And I definitely would not put the housing, the real estate, into a corp. We can go over that in the tax section. But let's say it's an LLC, so they're fellow LLC members. But you're the manager. You're managing the whole thing. They're just putting money in and getting paid. They would essentially have the exposure of a limited partner, right? They would have risks to the extent of the capital that they put in. That'd be it. That'd be the max their exposure would be.
Where's the fork when you go to, for liability purpose, LLC versus S corp?
No liability difference. That's been tested, right? So LLCs came out in this state. 1995, I think our legislature gave us the LLC. People had questioned, well, gosh, does it have the same liability protection as the age-old corporations that have been around for years and years, hundreds of years? Go back to, I think, Sweden, the first one, like year 700 or something, right? And yeah, it has the same liability protection. Same liability protection. Shield of liability between the owners and the entity itself. If it's truly an entity liability. So there's no distinction from a liability perspective. It's really a question of how do you want to be taxed ultimately.
As a single owner LLC, how does it get taxed?
It's your choice. You have it taxed however you want, essentially, other than you don't have partnership available to you. Mm-hmm. So it used to be when I started practicing in the 90s, the IRS didn't know how to deal with LLCs. And so they had some tests, and you had to make yourself, you had to choose how to have certain provisions in your documents to distinguish yourself from a corporation, so you weren't going to be taxed as a corporation versus a partnership, which is what you'd want to have taxation as. Eventually, the IRS got tired of the whole game, and they said, essentially, you can do whatever you want. That's the way it works, truly, under the tax code. You can be taxed however you want. Other than, so if you're single owner, could own an LLC, own the interest, all the interest in LLC, and your tax options would be, you could have it so-called be a disregarded entity for tax purposes. Again, and this is looking from, so to form an entity, you form with the Secretary of State, okay? It's like the birthing hospital of entities, okay? That's what it is. That's your relationship with the state, and that's your relationship with whomever you deal with in the state, pursuant to, like, for example, the Limited Liability Company Act, right? Defines what your relationship is for liability purposes and so forth. That's related but completely separate otherwise from how are you going to be taxed from the federal government, okay? And those are two different universes and two different choices. So you can have an LLC, single member. You could choose to be disregarded entity for tax purposes. So if you know anything about tax, right, you got individual income tax liabilities reported on your 1040, right? Okay, so it's going to pass through on your 1040. It's going to be on Schedule C, just like it's a sole proprietorship. It would be taxed as a sole proprietorship. Okay, Schedule C reports on your 1040. Okay, you could choose to have the single member LLC taxed as, let me make it more complex for just a second. So let's say you're married, okay? You're married. In that circumstance, like, well, so are we partnership? We got two owners. Typically, it's going to be seen as one owner, husband and wife, okay? And you're just going to have it taxed as the sole proprietorship, disregarded entity, okay? You could I don't think I've ever had a client want to do this, or a CPA advise if they wanted their client to be taxed this way. I want my husband and wife clients to be taxed as a partnership. Okay, it's probably unnecessary complexity. So, but you could do it. Okay, but typically you're just seen as one community property state, right? One owner in a community property state like we have. So it has the same effect for husband and wife. A single owner could have the LLC taxed as an S corporation. So you make a filing with the IRS within 75 days, then have it taxed as an S corporation. Okay. You could, I suppose, also file and have it treated as a C corporation. Okay. And sometimes people will treat it as an S corporation. Sometimes because they do it late, they single owner and it's discarded entity for a few years. Then they come across a CPA and they say, "Oh, you should really be an S corporation." We can go over why that would be. And so they elect at that point to be treated as an S corporation. It's not my favorite because now you have corporate documents or LLC documents and they say, LLC, but then, so from the views of the IRS, you're taxed as an S corporation, as a corporation, but you don't have shares. And it gets a little bit cumbersome, a little bit weird. And there's ways, it's probably more academic than real, but you could trip yourself out of qualifying as an S corporation. And then you'd be a C corporation, which it probably isn't the choice that you'd want. So it could be an S or it could be a C. Those would be your options. So if you have two owners that own the LLC, not husband and wife, obviously discard entity is not an option. Typically, the default essentially would be treated as a partnership. And you still have the options available to you to be treated as an S corporation or a C corporation. But essentially, you can almost in every circumstance choose the taxation.
Everybody knows what an
That you
SEC
want.
corporation is, right? Yes, no.
We'll go over that. That's the other big issue. I'll just go through it in the context of what we have up here. Let's start with the student veteran housing. Okay, so this is going to own dirt. It's going to own an asset. You typically assume that your dirt, your real estate is going to appreciate. Okay, so and you've got investors. They might be equity owners, partners. Okay, so you got, and you think maybe you're going to have employees managing. So you got employees, and you got multiple owners. Okay, so your options would be an LLC or some sort of partnership. You've heard like limited liability partnership, limited partnership. Now they even have it's called limited liability limited partnership, LLLP. I mean, there's certain reasons. I formed 0 of these before. You might have some really good reason that you want to add this complexity to your life. Okay, so LLLP, LLC, LP, LLP, limited liability partnership. Like a lot of professional accountants, attorneys, architects, whatever, form limited liability partnerships. They've been around forever. Limited partnership, right? I'm familiar with what a limited partnership is. You have a general partner, and then you can have as many limited partners as you want. And they essentially have the same protection as LLC members have, limited liability. And that's why sometimes now they're forming these LLLPs, because you can have a limited liability general partner with as many limited partners as you want. Again, primarily, almost 100% of what I form as attorney representing businesses, LLCs, and a corporation that's taxed as an S corp. Maybe 99%. For some occasions, you can have they want to be a C corp. It's extremely limited. I have one right now that we're forming as a limited partnership because the owners and the clients are out of Canada, and that's what they need to do for purposes of working with their Canadian attorney and their Canadian CPA, and some weird way that you're taxed in Canada, and they got to have it they can't have it as an LLC. It's seen some way weird by the tax code in Canada, so they have to have it as an LP so they get the tax result that they want. But otherwise, we never form those. It's adds unnecessary complexity. Everybody now knows they're familiar with LLCs and they're familiar with the corporation, right? And when someone deals with your company, if it's a corporation, they don't know if it's an S or a C, right? It doesn't have a little, S behind it or a little C, whatever. That's for your personal tax purposes. So really for this business, you're going to either be an LLC or you're going to be some sort of corp, okay? And sort of a threshold issue is, what are you putting in the company, right? It's going to be real estate, okay? Appreciating asset. And the problem is, key distinction between a corporation, whether it's an S or a C, an LLC is, if you put an asset in and you eventually want to get it out to your partners, whatever, make a distribution of it, 10 years later, it's appreciated, for whatever reason you guys are going your separate ways, to get it out of the corporation, you can pay tax twice on it. You can pay tax as it goes out, as you little apartment complex as it's going out to the shareholders out here, okay? S or C, doesn't matter. When it's going out at this threshold right here, you're going to pay tax on the difference between the fair market value at that time, and the tax basis, basically your cost basis in the asset, right? Whatever that result is, you're paying tax on that at the corporate level, maybe 35%. Who knows, right? Tax law, they say, oh, it's permanent, whatever. Nothing's permanent. Even the Constitution of the United States is not permanent, right? Amend it. Nothing's permanent. When they talk about in the tax universe, something that's permanent, it's just because it doesn't have a sunset on it. That's it. Lots of laws get passed. The tax universe, they have a sunset on it, so they don't call it permanent, right? But in reality, Congress get together, oh, it's permanent. There's no provision within whatever the tax provision is that's going to make it go away within a certain period of time, right? That's deemed permanent. But Congress can get together in a day, change it. There's no permanency in the law. I can tell you that. Okay.
Can you explain that part again? It was fair market value. You played a difference.
Fair market value. So let's say at the date it's going to be distributed. So let's say the cost basis was you bought it for $1 million. Okay. 1 million. If you're accounting, then you like 2 M's, right? Each one stands for 3 zeros, right? You get that? Right? Does that frustrate you?
No, I like it.
Right, 1 M, and this is street talk. You go, oh, if it's 1 M, it's 1 million. In reality, it should be $1,000. 1, 2, 3, right? M stands for mil, whatever, right? So you get anyway. So you put 2 M's. Okay, so $1 million, and let's say, hey, 10 years later, now it's worth $10 million, right? I'll put all the zeros there. Okay, so what's the difference? Yeah, it's 9 million. 9. You're going to get taxed on 9 million at the corporate level right here, 35%. Okay? Big mistake. If you're the attorney, you set this up and you put that in there, you're going to get sued for everything you have. Okay? But it's an easy one. If you make that mistake, you shouldn't be practicing. Okay? So now, bad thing is, now you as an individual shareholder out here, so it gets taxed on its way out the door, and then you guys are, let's say it's going to go out and you're going to get each a co-tenancy interest. There's 3 of you, so you're going to get 1/3 interest in the building, okay, as co-tenants. Okay, so now you're going to have basis in your stock. Let's say you put in, $100 to buy your stock originally, and you guys got a loan on the building and all this stuff, right? But really didn't put any money in, you leveraged and all that stuff, okay? So you're going to have coming out to you essentially an asset worth, $3,333,000, whatever, okay? That's what's coming out to you, reportable to you. And what's your basis in that? That's what you received. Your basis is $100. You're going to get taxed again at your income tax level. It's going to be capital gain. But you're going to pay, under today's regime, you're going to pay 23.8% on this right here. Yeah, it sucks. And that's a problem. So you don't want appreciated asset ever to be within a corporation. Okay? Dumb.
Maintain with the LLC then?
Yeah, you put in your LLC. So the difference LLC, you got this, you got your 3 owners, whatever. Apartments going out. First of all, non-tax event at this level right here of the LLC. No tax, nothing. It's going out. It's going to go out to you guys individually. Again, because it's a tangible thing. It's not dollars. When you're liquidating, you're closing up your business. You're going to hold as co-tenants. Goes out to you guys individually. You guys are each holding your 1/3, right? 1/3, 1/3. No tax. You can wind up that entity holding that real estate, get out of being in partnership or incorporate, whatever, with no tax effect. That's the difference between it. You do not want to have appreciated asset going into an entity that's taxed as a corporation, S or C. So if it's holding dirt, any other thing that might, and it was appreciated, who cares? Trucks and whatever, doesn't really matter. But that's a gross example of what could happen to you if you made the wrong entity choice at the inception. So your play's easy. It's going to be an LLC. You can have any kind of other partnership, whatever. Everybody recognizes the LLC. Is a beautiful thing because you can treat, you could have, let's say you have two partners, and we'll call them partners, or members of an LLC, whatever, okay? You could each be 1/3, but you could treat the economics differently than you can in an S corporation in particular. You could say, okay, we're each 1/3, but with certain economic income, whatever, the first portion of profit, whatever, I get 75%, or what, you can distinguish between yourselves, even though you're 1/3 owners. The ultimate tax result coming out to you on a yearly basis could be treated differently if you guys wanted to. You have massive flexibility within an LLC that you would want. Okay? Any questions about that? Gonna need an eraser here.
I have a question. With
Go ahead.
starting an LLC, would you go through articles of incorporation to start that? What would
The
you do?
LLC?
Yeah.
You just do what's called a certificate of formation. Super easy. You can do it online. I didn't spend a nickel on an attorney. We're happy to do it for you, but if it's simple. I mean, if you're an owner by yourself, I mean, who cares? As long as you get the thing formed and the Secretary of State accepts it, and you're an entity, right? You're probably good,
Can I add to that though?
right?
Please?
I would prefer that you go get an attorney, but I want to. Oh, you guys really need to.
Literally, you should go through an attorney because you should do business in a business-like manner.
I agree.
And we talk about this all the time, is that you need partners and leadership. When you start a business, you need a banker, attorney, accountant, and insurance.
CPA,
guy.
number one.
You know, that's 4, right? What I've seen in banking is this: every time we have to go to special credit, means that you're a really bad boy or girl, that you're not paying your loan. It goes to the department called special credits, and we go through the files, the credit file, and we're like, oh, look at this, they didn't do it right, or we should have caught it earlier. But if we go through an attorney, he knows, he's been doing it for a long time. He can represent you. Same thing with an accountant or a CPA. If they do the books, they're signing it and say, hey, this is correct to the best of our ability.
Yeah,
But,
I mean,
it's just professional way of doing it.
because when you set up your entity, if you're the only owner, and you're going to go get a bank account, of course, and entity's going to end up with its EIN, right, its own tax number, and typically banks will ask, show me do you have a limited liability company agreement, right? Well, if you don't have an agreement, he's like, no, and it's not legally required. But they're going to go, well, we're not going to bank you then. They go through a little checklist, right? Right?
Mm-hmm.
Yeah. I mean, he's ex-banker. They have this little checklist. Sometimes it's, somebody's been hired for like 3 weeks. They don't know what they're doing. They don't know what LLC, they're just going down the checklist. Like, oh, does they have an LLC agreement? I've had to call the bank, like, hey. Then I know somebody else in the bank, at one of the other branches. I have that branch call the other branch. Like, hey, can you call Susie over at, whatever branch, Alan Moore, and say, help me out for my client who can't get their account set up because they think they need some things that they don't really need legally, which I don't want to do for them. And anyway,
So
that
what
doesn't
were the
help
4
them.
accounts that you needed? The CPA, banker, attorney, and
Insurance.
CPA number 1, don't do your own taxes. You'll lose money. The CPA should be able to essentially pay for themselves by helping you make smart tax decisions. And again, tax code's always changing. They've done all these things the last 10 years to help people out, and buy equipment, you can expense it immediately rather than depreciate it, or you can take bonus depreciation. I mean, right? And so if you make the right choices initially, again, the CPA should pay for themselves. So yeah, definitely have professionals in your life that add value. Okay, let's do the coffee shop. It's a pretty easy one. Essentially, I mean, you put it in an LLC, whatever, and it can be taxes. My position is, if it's best to be an S corporation, form as a corporation, elect to have taxes as an S corporation, right? Why complexify your life more than you need to? So again, in this situation, you can be an LLC, you can be an S corp, you can be a C corp. As long as you're not putting appreciating assets into the corporation, at the end of the day, the tax result to you as the owner could be the same as between an S corporation and a C corporation. Okay? The problem is that, especially if you don't have a really competent CPA, right, if there's anything left over in your C corporation, technically, end of the year, then the corporation pays tax on it. Right? You can pay corporate level tax, and then whatever comes out to you, of course, you're paying income tax on, right? So it's just a more difficult game than you need to have, right? Playing from a tax perspective. Whereas S corporation, essentially, the entity, other than putting appreciated assets into it, the entity is invisible for the most part. Okay, so all the net profit's going to go out to you to be reported on your 1040. Okay, and it's only one, like jaws of tax. Only one jaws of tax. C corp, two jaws, right? You don't get bit by jaws twice. That hurts. So, I mean, in the coffee shop scenario, S corporation, former corporation, have taxes in S corporation. So the tax benefit, other than avoiding, there's really two pieces. One, you're avoiding double level tax. Two, you can play what I call the S corporation self-employment tax game, which I'm being recorded. I'm not afraid to say it, right? This game is legal. Congress created it for us. Congress revisits it on occasion. And because there's a tax difference between being treated as an LLC that's taxed as a partnership and being the owner and operator of an S corporation. And there really shouldn't be. And Congress, just from a policy standpoint, and I don't apologize for our tax code. Our tax code's stupid. Stupid. Unnecessarily complex. Just the statutes themselves at the federal level and the regulations about 75,000 pages. Okay, and we're talking about tax reform right now. Most of the tax reform that they ever talk about is at the individual income tax level, right? But remember, there's corporate tax, there's the most complicated tax of humankind, partnership tax. I mean, the terms that are invented and the concepts that are invented and when does it get more complex is when people like me figure out loopholes, and we start driving trucks through it. Congress doesn't like it, they deem it abusive, and so they change the code and they come up with a way to be taxed, and they close the loophole, then we find another way around it, right? Partnership tax, you have estate tax, gift tax, all sorts of other taxes, special excise taxes. What am I forgetting? Partnership, corporate, individual, state, gift, railroad. I mean, anyway, ridiculous. Most of what they talk about for tax reform is individual income tax. It's not going to change the rest of our tax code. There's so much complexity, it's crazy.
You guys want to get really numb, mind-blowing. If you pay your taxes on the Washington State Revenue webpage, and there's a list of all these things, and I'm going through it, and I'm trying to figure out what should I pay for my LLC. You go through the list, it's like cigarette sales tax, water this, parking. I mean, it just goes on and on. It's like, my God.
Yeah, that's not even talk. Yeah, I mean, state level tax. We're not even talking about state and local tax, right?
We haven't talked about that.
Right.
Yeah. It's
But
crazy.
our B&O tax, which you're paying for your business, whether you have profit or not, right? It's on sort of regressive tax. It's on your gross revenue, some percentage of gross revenue. Okay, so in this scenario, I would advise be a corporation, like to have it taxed as an S corporation. So the tax game is, right, you have income tax, and then you have FICA, right? Everybody's familiar with FICA?
Go that way too.
Yeah, I guess, man. FICA, which is the Social Security tax and the Medicare tax, right? Also known when you employ yourself, SE, right? And you might have had this if you had your own business, sole proprietorship, self-employment tax, right? And the SE, it's unnecessarily complicated again. And so globally, these are now 15? I don't memorize number. They're changing, whatever. It's the life and times of accountant, right? Accountant. 15.3%, which this is, 1.4% paid by employer, 1.5 by employee, whatever that leaves for the other 15.3. And then Obamacare, right? We got, if you're deemed rich, individual 200,000, couple 250, we add another 0.9%, down here, just as a side on tax, just because I want to entertain myself for a second, sort of policy statement. You heard that net investment income tax is the other Obamacare tax, basically on capital gains. It's complicated though. That's another 3.8%. Okay. What's special about this piece and this piece? Everybody's heard of indexing to inflation, right? Which sort of came about under Reagan. And you've heard of the AMT, right? The alternative minimum tax, and people complaining about it. The problem with the AMT was supposed to be just for the super rich and getting around, all these taxes and stuff. So we're gonna have this AMT thing, and it's gonna capture them with income tax in this other alternative universe. It's silly. They didn't index those numbers for inflation either. So they're capturing more and more people, right? Well, these two right here, not indexed to inflation. I never saw anything about the news on it. I think it was a deal, brokered in Congress for getting rid of, or essentially getting rid of the estate tax, which kicks in at $5.5 million essentially now, which doesn't apply to almost any of us. But these aren't indexed inflation. They're capturing more, until they get rid of this thing, captures more and more people, right? Because that 200,000 individual and 250 for a couple, that's not indexed, not growing, right? Everything else pretty much is indexed. All the brackets in your individual income tax code. What about a pink? Got some pink in here. There we go. Right, you got brackets, right? You pay X percentage on the first whatever amount, then you pay, higher percentage of the next amount, right? It goes up. But these go up every year, right? Next year goes up, next year goes up, index inflation. These don't change. They just keep capturing more and more people. It's regressive and punishing. So anyway, this is the tax that we're talking about, is the S corporation game. Okay? So there's two ways that you get paid out of the S corporation. You get to be treated as an employee of the S corporation because you're working within it. Okay, so you set within the eyes of the IRS a reasonably low salary. So let's say it's $50K. Okay, so you pay yourself $50,000 as an employee, and let's say your company makes an additional net profit of $50,000. The rest of that 50 goes out to you, not subject to the self-employment tax. Right? No self-employment. So you're saving somewhere in the neighborhood of 15.3% on that $50,000. Why wouldn't you play that game? Why would you be an LLC and as a service company and treat yourself as partners and pay? Because here's the other thing. So if you're a partnership and you're an active player in the partnership, you think of yourself as an employee in the coffee shop, right? Doing the exact same thing. You can't be statutorily, you cannot be an employee of the LLC, of the partnership, the tax partnership. You can't be an employee. So every dollar that's going out to you that's paying you in that net profit, you're paying 15.3% on it for no reason, because you made a dumb tax decision. And right from the outside, looking at it, there's no difference. Why is it a different tax result? Because our tax system makes no sense and it's dumb. And I don't make an excuse for it. That's why you need the advice of CPA in particular in your life, because at the inception, make smart tax decisions. You're going to save yourself dollars. No doubt. Don't pay, unless you want to pay more, just write a check to the federal government anytime you want. I've never had a client who said they want to do that, despite how they might vote. Okay? That's as far as I go on the political statement. So
you take X% as a salary, and the rest is a distribution?
as a distribution, not subject to self-employment tax.
Probably a low salary.
Legal loophole. And Congress, when it's really considered it,
Still has to be a
Yeah.
reasonable salary.
has to be a reasonable salary, right? And so the game, it's funny, so the game is exactly opposite with the C corporation, right? With the C corp, you want to take, as the employee owner of it, you want to take a reasonably high salary, right? Because this salary is deductible from the ultimate profit of the C corp, right? So you reduce the C corp profit as close as you can to zero, right? S corp, exact opposite situation, right? S corp, you want to take a reasonably low salary, okay? Because you're going to push out all the extra profit as distribution, not subject to self-employment tax. And Congress knows about it. And when they've really considered the S corp in like late 90s. All they did is expand it. It used to be applicable, you could have up to, there's a restriction on who can be a shareholder in an S corp. And it used to be 75 people could be shareholders max, okay? And then they expanded to 100. And the 100, in fact, one shareholder is everybody in that family. And I've never had to explore that far. But so like everybody in the Kennedy family is one shareholder, right? It's beyond like your kids and whatever. It's beyond that. So, I mean, every time they've considered, they don't expand it. Because why? I mean, probably remember in Congress on some sort of S corp.
So your S corp employee salary is taxable under 1040. You report it.
Yeah, you're like your regular employee.
Right.
Yeah, your W-2 employee.
And then the distribution, how does that come to you?
So it gets from a tax perspective, it gets reported to you from the corporation on the K-1.
Okay.
All right, it's called the K-1. K-1 is how your corporate tax return talks to your personal return. Get a K-1, you report on your 1040.
Isn't that a different tax bracket also? Like, is it taxed at a different level with the K-1 distribution? It's like
Not through the S corp.
Not through the S corp, okay.
Not through the S corp.
I get these K-1s, I just look at them and let the IRS figure them out because they're a pain in the ass for a small amount of money.
It's painful. It's
They come in-
painful.
They're coming in right now. They're coming in October for my April reporting.
Yep. So, not to get super complicated, but there could be different types of income that the S corporation made. Maybe is what you're going towards. Usually, it's going to be if it's service industry, it's all just regular income, right? But it could be that it's capital gain treatment or some other potential special treatment, and that would come out to you pro rata, and you pay different tax on it. Okay, it's usually not the case. Usually, if it's a service corporation, then S corp, then you're going to be paying regular ordinary income tax on it. And same thing with that's more typically the situation where it's taxed as a partnership. The partnership, same thing. Partnership. Have you heard the tax return numbers? Right, individual income tax right return is a 1040. A partnership return is a 1065. A corporation's 1120. It's just the form number for IRS. That's all it is. This is what tax people will talk about. 1120 is a C corp. 1120S is an S corp. That's it, right? And so these entities have to report somehow to you individually, and that's through. That's through what's called a K-1. That's just the name of the form. I mean, you go on Google, it's K-1. Take a look at it. Oh my God, what's all that mean? Right? I mean, part of what I do is tax attorney work. It makes my head hurt. Okay? I mean, give it to the accountant to deal with. I don't know how you deal with yourself in the accounting universe, but on a daily basis, painful.
So, I guess I have two questions. One about my shop, tax, but also with licensing. I guess I haven't, because when I look at, like, to fill out, I guess, for my license, they want a location. Well, I can't.
You haven't chosen one yet? Or
Well, yeah, I haven't chose one yet, and I guess, well, I kind of, like, I have the city down.
who's asking for location?
Okay.
Who the business licensing?
Yeah.
You mean? Yeah. That's because it's zoning, right?
Yeah.
So you can have a weed shop, so many feet probably from a school or whatever. It's a zoning issue. It's always zoning issues with marijuana industry.
Yeah, okay. So like how do I even, like, cause I can't find really a location until I know, like, how much I qualify for, I guess, for, business loan, and then I found out I couldn't get a business loan for it.
Yeah,
So, like,
that
I-
industry
Yeah,
is
but that's not just your industry, that's also for the coffee shop. Like, I need to have a location before I can even make an entity, and that doesn't make sense, because, like, I'm trying to form the entity, but I don't have a location yet.
Right.
And of course, I need to make it,
Yeah.
like.
It's like, yeah, it's like a catch 22 in, like.
So what would you do in
for what purposes? For the business
to make it?
license?
Yes.
Or typically you would use your house, right? Now, again, from a zoning perspective, I say, it's residential, but just to get over the hurdle to get to the next step, whatever,
Oh, yeah.
it's my house. I mean,
Oh, really?
I didn't know you did it.
Well, like you said.
Yeah,
like,
yeah.
you're just trying to get to that hurdle.
See, I guess I
Once
would,
you're going to apply for
But-
a loan, or, you know, your industry's gonna be very different as far as who's gonna lend you money for it
Yeah.
because of
Yeah.
the regulatory type things.
yeah.
Right.
And
So
that,
how you raise your capital is gonna be a different story.
so my thing is, so I'm guessing because, you know, how you go in, well, I don't know if you know, but when you go into a cannabis shop, you have to pay cash. And somebody told me that it was because they can't claim this money on taxes.
Oh yeah, they're probably cheating. That's right.
Okay, so like, okay.
One, because there's, I don't know, is there a bank now or a credit union that'll bank people?
Well,
Right,
rumor
but-
on the street says Timberland Bank, it's not just recorded, but rumor has it, but they're kind of like, you know, say you're a physical.
Retail.
Yeah, what retail, and that's it, they don't go any deeper than that.
Yeah, I'm sure they're gonna cheat, right? So it's like doing work on the table, and I'm not telling you to do that. I'm telling you it's right. I'm telling you
Right.
practically it's probably what's going on, right? Because you can't, your income, unlike every other business in the universe, you can't deduct most of your expenses other than your cost of goods sold, right? So your rent, your payment to employees, all those things, you can't deduct from your gross income. So I'm sure they're gonna report a reduced gross income, right?
Yeah.
Yeah, that's probably what's going on.
So
So
I,
it's,
okay.
Well, my understanding was because of the national, federal regulations
Yeah.
and state regulations, and the way the banks are structured, their laws, federal laws will not let them take money from a cannabis operation.
well, that's banking, but you're saying the cash issue.
Yeah.
Well,
They don't-
that's it, because they can't use a credit card or they
Yeah.
can't write a check.
Yeah,
So they have to deal in cash, which then gets into your thing of the accounting for it. Because
Yeah.
I don't know how Colorado reports that they made however many millions of dollars in tax money. You know, it's,
right,
you know, what do you think?
right. And, yeah, that's,
So how do you report your state tax on sales? How do you charge?
I
money?
don't have the business yet, that's why I'm asking. I don't have any information.
Yeah, so,
I'm
And it's
lost.
not a specialty of mine. You're going to find there are attorneys out there. Be careful who you choose. Most of them who are saying, "Oh, I'm a cannabis attorney," they used to be
Cannabis users.
users, but they're like criminal attorneys. And I'm now going to be a cannabis corporate attorney or whatever. And
Can I ask if you have any, like, a recommendation, like, for an attorney?
I don't.
I ran into.
I've stayed out of the
a
universe.
cannabis consultant, and I could probably track her down if you give me some information. I haven't seen her in.
There's
since she
one
became a user.
that's really famous that she's put on CNN and stuff on Wall Street Journal.
Yes.
She's up in Seattle. I met her once and I can track her down for you too. Probably the same one.
Okay. Cool, thank you.
Okay. I don't know. I mean, we've covered. Yeah. Other particular questions.
Yeah.
You know, because
From a
you're.
taxing perspective, how does this multiplier impact from a single owner LLC? What's the difference, the primary?
Sort of just what I described, right? So if you form as an LLC and then had disregarded as an entity, so it would just pass through your Schedule C. Essentially, the initial income tax on otherwise, if you're an S corp, what you're paying yourself in salary, that's just going to be the same. And the real difference there, again, is this whole distinction between being a W-2 employee of your S corp and getting wages that way, and then having net profit and pushing that out as distribution, not subject to the Social Security and Medicare tax. That's the difference. Mechanically, it's going to, if you're a disregarded entity, everything get reported on what's called Schedule C that attaches to your 1040, right? That's how it would happen. With S corp, it'd have the additional expense part of being an S corp. You're going to have an additional tax return that has to be prepared and filed, and that's going to report to your 1040 through a K1. But someone's going to have to prepare the Schedule C, so it's probably a few $100s in reality. So it's going to cost you, but hopefully you're running enough money through there that you're going to get it back from a tax perspective. You're going to save yourself money.
I'll defer.
Me?
Yeah.
Okay, so, I didn't know, my family, they own a CPA practice, but it's out of state. Would you recommend would it be smarter to get somebody here in Washington that knows like this, or
What state is it?
Indiana?
Indiana.
Can I answer that question? From a banking standpoint, every time we look at tax returns, we look at who prepared it. And if
Yeah.
it's just ABC bookkeeping, okay, we're gonna go, then we look at, okay, they signed it, but it's out of state, then our question is, what do they know about Washington state tax laws?
Yeah, that's what I'm saying, yeah.
If I were you, do business. in that
Do
state.
business in Washington,
Yeah.
yeah. I was
But
just-
could you do it? Yeah.
Yeah.
okay.
Could you do it? Yeah. You could do it.
I just
CPAs
wanted to
can do
keep it
it.
in the family, or,
Yeah, as a banker, we would ask, why are you using this CPA firm in Indiana?
Right.
Because they are family. And another question is, why is there a CPA firm in San Diego? Oh, I met him at the airport one day, we had a good time.
Yes.
Business, you know, that's not gonna cut it,
Right.
so.
Okay.
Yeah.
So, depending upon the type of service, like it's a consulting service or whatever, instead of going through a S corp or C corp or an LLC or whatever, sole proprietor, I'm doing stuff as a 1099, which makes it real simple to put into my 1040.
Yeah, I mean, that's Schedule C. You're just sole proprietor. Yeah, that's simple.
Yeah, and I have no liability other than myself, and
Exactly. Yeah.
I do harass myself at times, but.
Yeah. Yeah, my original speech was just make sure you're adequately insured, and I don't know what the consulting is, depends on your exposure, and whether you want to have adequate insurance for that. But otherwise, you're the only person acting for it from a liability perspective. Forming something does you nothing. Unless somehow you had a contract and you had contract exposure and the entity was signing in and then you didn't perform, then that liability lives with the entity you formed. But that's a rare circumstance. Generally not going to do anything. So
tends to be the.
you want to keep your life simple. I would just operate as sole proprietor as long as you're
And
technically.
actually, it went more from that also, that because of the nature of the work, it's a 1099, not a W-2. So they could have had.
Yeah, you're a independent contractor. I mean, that's so you have to handle all your. Yeah, I mean, it's a sole proprietorship for your purposes, and whoever you're doing the work for, right? They don't withhold for you. They don't do anything. Yeah, and they don't want to do any of that.
Yeah, so
It saves
makes
them
it
having
real
to
clean
pay.
and easy, and,
Yeah, because then whoever you're working for, right? They save themselves as the quote unquote employer the half of each of the Social Security and Medicare tax. That's their savings, and they don't pay into L&I, and they don't pay unemployment insurance.
Right, it's
Yeah,
a good
they're
deal for
paying-
them and some degree of exposure, but I'm in a position where I don't have that much.
Yeah,
But if
so
you had someone that was a delivery person for you between your supplier and your retail, and you had someone just as a truck driver on occasion, you could hire them as a 1099.
yeah, if they're a truly independent business, yeah. But in that circumstance, I would have insurance.
Yeah.
I would have insurance because if
Good.
that person, or I'd make sure they're adequately insured, maybe get added as an additional insured on their insurance policy, whatever. That'd be my key concern. Be the liability exposure for that person. They run somebody over. It's not that you legitimately should have that exposure, but if they are an independent contractor, but any personal injury attorney worth their salt at all is going to sue everybody and figure it out later. Drag the insurance companies in, drag everybody in, and might have money, and then we're going to extort essentially some money out of you in settlement. That's why I look at it as just extortion, personal injury attorney. So just the way it is, just a legal extortion.
So that's
So,
it, 1
going
hour.
tangential,
That's it.
Yeah, we got we got our
I'm
money's
involved in
worth.
a number of nonprofits who get sued upon occasion.
Yeah.
And I don't know how
You serve on the board?
yeah.
Yeah.
We
So
have B&O insurance, but,
you have the D&O insurance?
D&O, yeah.
That should be good. I'd talk to your insurance broker and say, hey, what if it's $1 million policy or get sued for 3, it's inadequate, and then I'm getting named individually. Do I have any coverage from my umbrella or whatever, if you want to be really safe?
Yeah, characteristically, it's $1 million, but, I mean, I was even named in a suit against the Chamber of Commerce, because of a,
Oh, geez.
Google
So-
my name and find myself in court records.
But I mean, number one, if you're going to serve on a nonprofit, again, I mean, you want to say, hey, do we have D&O insurance? Number one. And then, again, if you're really concerned about it, I'd talk to your insurance broker about whether, if you have an umbrella, does that cover whatever could come up in that context?
Well, the two things I ran into were disgruntled employees for whatever reason, and someone's, mismanaging the money.
Yeah, I mean, there's always potential money issues. And you should ask from a fiduciary standpoint, does the nonprofit have EPL insurance, employment practices liability insurance? Right, in case it gets sued by some disgruntled employee? Right,
Yeah, her parting words were, "My lawyer will see your lawyer."
yeah. Yeah, I guess that's better than, I'll see you in the parking lot for a duel. Although the duel is more efficient in resolving dispute, I can tell you that, but it can be permanent. Well, thanks for listening.
Thank you.
Happy to have done it.